What does it actually mean to be a Crorepati in India today? If you grew up watching Indian television, movies, or advertisements in the late 80s, 90s, or early 2000s, the word Crorepati carried an almost mythical, godlike weight. It was the ultimate, unshakable symbol of extreme wealth. It conjured up images of sprawling family mansions, a fleet of high-end imported cars, private drivers, designer silk suits, and an endless stream of cash being thrown around without a single worry. We were culturally conditioned to believe that hitting a net worth of 1 crore rupees was the final golden ticket to a life of unbounded luxury. But let's pause and look at how the world has changed since then. Thanks to 3 decades of continuous inflation, a net worth of 1 crore rupees does not carry the same purchasing power it did in 1995. If you believe that hitting a 1 crore net worth today means you can instantly walk into a dealership, buy a luxury German SUV, lease a high-end villa in Goa, and fly first class to Switzerland every summer, you are heading straight toward a brutal financial wake-up call. If you spend your first crore on lifestyle assets, you will find yourself broke again in less than 18 months. In the real modern Indian economy, the true magic of reaching a 1 crore net worth has absolutely nothing to do with buying luxury toys. It has nothing to do with showing off to your neighbors, relatives, or corporate colleagues. Instead, a 1 crore net worth buys you something infinitely more scarce, more valuable, and more revolutionary: complete sovereignty over your daily schedule. It buys you the quiet, unshakable luxury of looking at a toxic boss, a high-stress corporate environment, or a soul-crushing 3-hour daily commute, and knowing with absolute mathematical certainty that you have the power to say no. Reaching this milestone represents a massive psychological tipping point known in the personal finance world as coast fire, the exact physical moment where your accumulated money begins to do more physical, mathematical work for your future than your active daily corporate salary ever could. In this deep dive, we are going to look at the exact numbers that govern this reality in India. We are going to expose the silent, illiquid trap that leaves millions of urban Indian families asset-rich but cash-poor. We will break down the precise compounding mathematics of how a liquid 1 crore portfolio completely covers a family's basic living expenses, and we will explore the profound psychological shift that occurs when you stop climbing the financial hill and start coasting. If you have ever wondered what this milestone actually feels like in the local Indian context, away from the hype, the flex culture, and the social media noise, grab a cup of chai and let's break down the math. Before we touch a single compounding formula, we must address the single biggest wealth-building mistake made by the Indian middle class: confusing an illiquid net worth with a liquid net worth. In India, real estate is deeply woven into our cultural psychology. We are taught from childhood by our parents, relatives, and society that buying a house is the ultimate sign of settling down and achieving true financial security. And so, millions of young professionals spend their 20s and 30s pouring every single rupee of their hard-earned cash into a massive down payment and signing up for a grueling 20-year home loan for a flat in Bangalore, Mumbai, Delhi NCR, Pune, or Hyderabad. Eventually, over a decade or two, the property value appreciates, the loan gets paid off, and one day they look at the market and realize, wow, my flat is now worth 1 crore rupees. I am officially a Crorepati. But here is the brutal reality check. You cannot buy groceries with a brick. You cannot pay a medical bill with a piece of drywall. If your entire 1 crore net worth is tied up in the apartment you currently live in, your daily life, your stress levels, your workplace anxiety, and your financial vulnerability remain exactly the same as the day you had zero net worth. Think about the mathematics of this illiquid trap. If you live in a self-occupied flat worth 1 crore, first, your monthly cash flow from that asset is exactly zero. It does not pay you a single rupee of income. Second, that asset actually drains your active monthly cash flow. You have to pay the society's monthly maintenance fees, annual municipal property taxes, home insurance, and continuous upkeep and repair costs. Third, if you hit a financial emergency, such as a medical crisis in the family or a sudden job loss, You cannot easily slice off a bedroom of your apartment and sell it to pay the bills. Selling a real estate property in India takes months of listing, dealing with brokers, navigating complex paperwork, paying registration costs, capital gains taxes, and massive brokerage fees. You are, by definition, asset rich and cash poor. You are still completely dependent on your next monthly paycheck. If your employer fires you tomorrow, you cannot buy food with your home equity. Now, let's contrast this with someone who has a liquid net worth of 1 crore rupees. A liquid net worth means your money is sitting in highly accessible, compounding financial instruments. It is distributed across diversified equity mutual funds, debt mutual funds, arbitrage funds, and highly secure tax-free compounding accounts like PPF or VPF. If this liquid Crorepati faces a sudden emergency, they can tap into their portfolio, click Redeem, and have cash deposited directly into their bank account within 2 business days. But even more importantly, a liquid portfolio is actively compounding. It is alive and working for you. While the self-occupied real estate owner is working to pay for their house, the liquid investor's portfolio is actively compounding, generating real, tangible economic output every single day. When we talk about the life-altering magic of a 1 crore net worth, we are talking strictly about liquid wealth. We are talking about money that is free, unchained, and working directly for you in the markets. Now, let's look at the raw, unshakable mathematics of why a liquid 1 crore portfolio is the ultimate financial tipping point in India. Let's assume you have successfully built a liquid portfolio of 1 crore rupees. You have structured it sensibly, maintaining a highly disciplined, standard asset allocation. 70% in diversified equity mutual funds, index funds, mid-cap and large-cap funds, and 30% in stable, tax-sheltered debt instruments like the Voluntary Provident Fund, VPF, Public Provident Fund, PPF, or high-yield arbitrage and liquid funds. Historically, over any rolling 10-year period in the Indian market, a balanced portfolio of this nature can comfortably target a conservative, long-term average compound annual growth rate of 12%. Let's run the math on a 12% annual return on a 1 crore portfolio. In year 1, your portfolio generates 12 lakh rupees in pure compounding growth and interest. If you break that down monthly, your money is growing by an average of 1 lakh rupees every single month. Now, let's look at the average cost of living for a comfortable middle-class family of 3 or 4 living in a major Indian metro city like Bangalore, Pune, Hyderabad, or Chennai. If you do not have a home loan EMI, either because you rent a sensible apartment or have zero debt, a highly comfortable upper-middle-class lifestyle costs between 50,000 to 70,000 rupees per month. This easily covers renting a nice 2 BHK in a secure society, high-speed internet, electricity, organic groceries, regular dining out, children's school fees, and medical insurance premiums. This means your monthly living expenses total roughly 6 lakh rupees to 8 lakh 40,000 rupees per year. Do you see what just happened? Your liquid portfolio is generating 12 lakhs a year in organic compounding growth, while your family's actual cost of living is only 6 lakh rupees to 8 lakh 40,000 rupees a year. Your money is now officially earning more than your lifestyle costs. This is the exact mathematical definition of coast fire, financial independence, coasting. When you hit coast fire, you have reached a magical state where your existing retirement nest egg is already 100% funded for the future. Even if you never save another single rupee from your active salary for the rest of your working life, your current 1 crore portfolio will continue to compound in the background. Let's look at the compounding trajectory. If you are 35 years old today and you never invest another rupee, your 1 crore portfolio compounding at 12% will naturally double to 2 crores by the time you are 41. By the time you are 47, it will double again to 4 crores, and by the time you reach retirement age at 53, it will have grown to a massive 8 crores. The moment you hit 1 crore liquid, the crushing, lifelong pressure to save for the future is permanently lifted off your shoulders. From this point forward, Your active salary only needs to cover your immediate, day-to-day living expenses. You no longer need to stress about saving 30%, 40%, or 50% of your income every month. You can spend your entire paycheck on living, traveling, or enjoying life because your portfolio is already handling 100% of your compounding future in the background. While the math of Coast Fire is beautiful, the true impact of this milestone is deeply psychological. In India's highly competitive corporate culture, work-related stress, burnout, and mental health crises are at an all-time high. Millions of professionals tolerate toxic bosses, grueling 14-hour workdays, and massive ethical compromises simply because they are trapped by their monthly bills. They are paralyzed by the fear of job loss because they have EMIs to pay, school fees to clear, and parents' medical expenses to fund. When you have zero savings, or even just a few lakhs in your bank account, you are in a state of continuous, low-grade survival panic. You cannot afford to speak up in meetings, you cannot challenge bad decisions, and you certainly cannot risk quitting a toxic environment without having another offer lined up. But when you cross the 1 crore liquid net worth milestone, your relationship with your career changes forever. Let's break down the psychological security of this position. If your comfortable cost of living is 8 lakhs a year, having 1 crore liquid means you are sitting on more than 12 years of pure, uninterrupted living expenses in cash convertible assets. Take a moment to let that sink in. 12 years. If you decided to walk out of your job today and you didn't earn a single rupee of active income for the next 12 years, your family's lifestyle would not change by a single millimeter. This level of security transforms your active daily psychology in 3 profound ways. First, it completely cures your fear of job loss. When your colleagues are whispering in panic about corporate layoffs, restructuring, or artificial intelligence replacing jobs, you remain perfectly calm. If a layoff happens and you receive a pink slip, it is not a life-shattering catastrophe. It is simply an unexpected, fully paid vacation to figure out your next steps. Second, it gives you negotiating leverage. Ironically, when you do not desperately need your salary to survive, you become a much better, more confident professional. You speak your mind clearly, you set firm boundaries around your personal time, you decline unreasonable weekend work, and you negotiate for promotions and raises from a position of absolute strength. You no longer smell of desperation, and the corporate world respects nothing more than professional competence backed by quiet independence. Third, it allows you to take calculated career risks. Want to join an early-stage startup that pays a lower base salary but offers massive equity upside? You can do it. Want to take a 6-month sabbatical to travel, learn a new skill, or spend time with your family? You can do it. Want to start that business you've been dreaming of for a decade? You have the financial runway to fail for 3 years straight without your family ever feeling a pinch. A liquid crore is not about being rich enough to buy luxury. It is about being rich enough to buy your intellectual and emotional sovereignty. If you look at social media, you might think a crorepati is someone who dines at 5-star hotels every weekend, wears designer labels, and drives a brand new German luxury car. But if you actually look at the quiet, self-made wealthy individuals in India, the true practitioners of stealth wealth, you will find that their daily lives look remarkably ordinary. The person with a liquid 1 crore net worth is highly unlikely to be showing it off. They still drive a reliable, fuel-efficient hatchback or mid-range SUV that is completely paid off. They still live in a comfortable, sensibly rented apartment or a modest, debt-free home. They still shop during sales, eat home-cooked meals, and use public transport or auto rickshaws when convenient. They look, to the outside world, completely average. This is because they have realized a fundamental truth of wealth psychology. True wealth is what you don't see. Wealth is the expensive cars you didn't buy. It is the designer watches you passed on. It is the luxury flat EMI you refused to sign. When you choose to prioritize the appearance of wealth, you are trading your future freedom for the temporary, fleeting envy of strangers. You are buying depreciating liabilities to get validation from people you don't even like. But when you prioritize real, invisible, liquid wealth, you are buying the ultimate appreciating asset, autonomy. Think about the contrast. One person earns 3 lakhs a month but spends 2.8 lakhs on luxury EMIs, rent for a high-end villa, and designer lifestyles. They have a flashy image, but they are exactly one missed paycheck away from complete panic. They are a slave to their salary. The other person earns 1.5 lakhs a month, lives in a sensible house, drives an ordinary car, and has systematically built a 1 crore liquid portfolio. They have no flashy image, but they own their life. They can sleep 80 hours a night with zero financial anxiety. Reaching 1 crore liquid is the moment you realize that the new car smell is a scam, that high-end societal clubs are a distraction, and that the greatest luxury on earth is waking up in the morning and knowing that you, and only you, control how you spend your day. It is the freedom to spend a Tuesday morning reading a book, a Thursday afternoon playing with your kids, or a random Friday taking your parents for a routine health checkup without having to beg a corporate manager for casual leave. That is what 1 crore actually feels like. It is quiet, it is peaceful, it is invisible. So, how do you get there? How do you transition from the daily struggle of saving to the effortless compounding of your first crore? The roadmap is incredibly simple, but it requires unshakable, long-term discipline. First, you must declare war on consumer debt. You cannot build a 1 crore liquid portfolio if your cash flow is leaking through car EMIs, zero-cost EMI electronics, or credit card bills. Before you can build assets, you must completely eliminate all liabilities. Keep your fixed costs as low as humanly possible. Second, leverage the power of the step-up SIP. Do not keep your monthly investment static. As your career progresses and your salary increases, resist the urge to upgrade your lifestyle. Instead, upgrade your investments. Mathematically, increasing your monthly equity SIP by just 10% every single year cuts your time to reaching 1 crore by nearly 1/3. For example, if you start with a 20,000 rupee monthly SIP and increase it by 10% every year, compounding at 12%, you will hit your first 10 lakhs in just over 3.5 years. By year 10, your portfolio will cross 51 lakhs, and by year 15, you will officially cross the line, landing at a massive 1.17 crores. Third, embrace stealth wealth. Let your net worth grow in silence. Do not feel the need to upgrade your car, your phone, or your apartment just because your bank balance has crossed a milestone. Let your friends and relatives assume you are doing okay while you quietly build a fortress of financial independence. Reaching your first liquid crore is a long, hard journey. In the beginning, the climb is slow, brutal, and entirely savings-driven. But once you cross that tipping point, the heavy lifting is taken over by the laws of physics. Compounding takes the wheel, and your money begins to grow on its own, paving the way for complete career and lifestyle sovereignty. Build your foundation, protect your cash flow, and let compounding buy back your life. Thank you for watching, and we will see you in the next video, where we will explore the next massive milestone, what a 2.5 crore net worth actually feels like in India, and how to safely live off your assets forever.